All right, so we'll review AU at the end because that's the one I actually took a position on. But yeah, let's see. All right, pretty much going to continue. Friday's lecture was, right, I'm pretty sure this was Friday, and we had acknowledged the fact that we had essentially caused a bullish liquidity grab with the mitigation and an impulsive move to the upside. And even though we hadn't taken out structure, we were more than likely going to take out that structure because of the high momentum, low momentum to the downside, and the fact that we had already pretty much given a very deep retracement. So as you can see currently, right, we've already taken this out, right? And even though we have momentum to the downside, broke preliminary level of structure, I don't want to assume that, because we are still bullish from a minor intraday perspective, even though our overall is still bearish. One second, sorry about that. So even though this is potentially a liquidity grab, we have to see it from a bigger perspective, which is the fact that this, right, is now basically a solidified low, especially due to the fact we've already taken out the previous high, making this bullish from a potential major intraday perspective, even though the swing is still bearish, right? So it's one of those tricky scenarios, right, where I'm personally not looking for any swings just yet, just because of how uncertain this looks, right? Even though our structural range is to the downside, you guys know I don't like to play the whole complex pullback terminology, so, or ideology. So even though the momentum is low, I don't want to assume bearishness, right? Because pretty much our area of entry is so small, you know, we could take an easy loss off of that. So for the most part, you have to assume we will continue higher. You cannot assume otherwise without seeing another confirmation, whether it's, you know, we start pushing up and this makes this a solidified low and then coming down, making a bearish structural range. That could happen, but I cannot assume that. I don't have the data to assume that. So based on the data at hand, right, what is happening? We are having a bullish move. How is it happening? Based on bullish mitigations. Now, why is it happening? Okay, so to understand a why, you got to zoom out. So let me actually take a bunch of these. There we go. Right, so there are a couple of whys. Why number one, the fact that we took out a major liquidity point from February, right? And keep in mind, this is the same principle as this, right? Hence why we've seen the decline in GU, even though it's been very slow, right? It's the same thing is pretty much here on DXY, sorry. So the issue is not whether we're going to reverse, because that cannot be judged until this high is taken, right? But we have to acknowledge the fact that we do have low momentum, even though the order flow is strong. From an overall perspective, we are still bearish, whether it's taking out liquidity, potential inefficiency. Keep in mind, we have pointed that out a couple of weeks ago. So now it's a matter of focusing on your major minor intraday to really give you that directional bias, because for the meantime we are bullish, right? And keep in mind, we can convert multiple times, right? Keep in mind, we did convert back to bearish here, right? Because of the disruption plus the break of structure plus the internal structural range continuation, right? But then it switched because of the bullish liquidity grab. But we cannot assume that at the time. So you guys see what I mean by you can't assume. You have to essentially play with the data that you have. So although this is not something I would take to the upside, right, I would like to see that mitigation occur. And if not, you know, give me a bias. But this is way too easy. I'm not going to take this type of trade because, for one, we just took liquidity out, and you guys know that we tend to give a correction after that essentially liquidity grab. Like same thing with DXY here on a higher time frame, same thing with GU on a higher time frame. So for the meantime, right, I want to see how this plays out. I'm not trying to touch this, especially with how EU was looking, right, essentially in the point of no man's land, in my opinion, right, because I typically don't play much after strong impulses because these are the impulses that I'm trying to catch. So because I know the impulses has already occurred, right, I know that we are in a corrective phase, right? So either, right, I wait for the bias to shift, because keep in mind, from a daily perspective, this has been taken out, so we are bullish, right? So it's now a matter of essentially seeing when we're going to reverse. So keep in mind, there's still the inefficient pricing just as it is with DXY, but I don't want to assume that, like I said, because that is considered taking out a level of structure. Same thing here. You would need to take out a level of structure to achieve this inefficient pricing, even though it's technically been partially tapped. So the cool thing here, right, about EU, wrong time frame, is the fact, right, that this is actually our full structural range. So the bullish sign is much clearer here than the bearish sign is on DXY. So although, you know, we are technically bearish on a minor intraday, even major intraday, our swing is still clearly bullish. But now it's a matter of how far we're going to retrace, and if we retrace too deep, then that would be a potential change of bias, but I cannot assume that, obviously. So looking at the daily, right, let's start over here. Right, first thing I notice, daily inefficiency, and that is what we're not, I wouldn't say we're reacting from, because we have 1-2 reactions. So I would zoom in. Right, inefficient pricing here. Right, and so that's where we're technically reacting from, but I'm pretty sure we could find something lower. Inefficiency 50%. As you can see, the 50% is pretty much tapped here. But the thing is, right, is in order to achieve this H4 discount, right, because it is an H4 discount based on low high retracement, right, we do need bearish momentum, bearish order flow to occur. Without that, it's hard to make that assumption that you're going to reverse. So for the meantime, the reason why I don't want to, you know, play a long here, which would be a short here, that's too easy. Even though our minor intraday is bearish, that's too easy, right? Even though this can by all means happen, but it's too easy, because I'm also considering the fact that we can reverse, because low, high, unwillingness, continuation, well, high, low, retracement, unwillingness, reversal, right? And if that reversal occurs, then, you know, by all means, I can switch my bias, but I need to see this show its hand. I don't consider this to be showing its hand, just because I don't like how we didn't take out lows, right? So there is a chance that this could be mitigating something. So let's see. And you can see that, perfect. Right, so bullish order flow is in play, even though it is counter trend in terms of minor major intraday, right? From a scalp, even a swing perspective, we are pro trend. And as you can see, the bullish momentum has caused, or the bullish reaction has caused, a break of structure. So this is very interesting, because here and one. Well, we didn't react from anything here, but there is an inefficiency fill here, and I wouldn't really consider this the strongest mitigation, right? But even though that has occurred, we have still taken out highs. So technically, this reaction is very key, right? I'm not saying I'm going to take a trade off of here. I'm just saying this reaction is very key, because at the end of the day, all this could do is play that inefficient pricing that we noted, right, and die, because the minor intraday is still bearish. But I do not want to play that because of where I stand on an overall picture, right? I don't want to get caught selling too low, right? Even though by all means it could still continue selling, and if that's the case, then this can easily just die from the, just fall from the sky. But I can't assume that, right? So for the meantime, we are bullish, right? But you need that sign of bullishness, right? That true structural confirmation in order to now give that reversal. So even though, right, this looks very probable in my opinion. What time is it? 10:49. Yeah, indecision on H1, right? I'm very interested to see what happens here, because we have the mitigation in play here, and we also have a potential mitigation in play here. So I do want to see how we occur, what happens inside of this range, so that we can then continue direction. So let's see, daily. Yeah, daily still looks bearish. I don't want to force anything here, right? So keep in mind, right? But then comes AU. I'm sorry. Here we go. So this is actually something I played this morning. Actually, we'll come back to this. Go to GU. Right, so GU here. Right, seems like it reacted exactly where we thought it would react, and that occurred right now. Now, my issue this morning was the entry part, right? I didn't want to just catch the order flow continuation, right? For the simple fact that even if I catch the order flow continuation, I don't want to get taken out on a pullback and then see it fly. I didn't want that to happen. I always want to see that pullback, but it is what it is. But you do see this pretty much react precisely where we wanted it to last week. Now the issue was you could have been trading a potential limit here, but now I don't know where you would have put that limit at, right? Which is why I wanted to wait for that lower time frame reaction, and that's pretty much what we got. Now it's just a matter of seeing whether this push up to the upside is just a pullback based on high-low retracement, or if it is a overall conversion between taking out the high, retracement, continuation, right? Because you can see there is a very clear wick here. So I do want to see if this is a confirmed break of structure to then give us the opportunity to go higher. But it is counter trend, right, in terms of major minor intraday, so be wary. All right, but this is super sloppy. All right, we've pretty much been stuck here for how long now? Let's see, 200 pip range in 30 days. Ugh. By all means, we can still recover and still continue lower, right? But I don't want to stray away from the overall bias just yet, right? Even though I kind of do have a reason, but this is not distribution. Definitely not distribution. 1, 2, 3, 4, 5, 6, 7 order flow pushes doesn't make sense for me. Where this distribution is occurring, or potential distribution is occurring, does make sense in terms of accumulation, reaccumulation, distro, but I don't really believe in that model in an intraday swing scale. I do believe in it from a potential overall scale, right? I do believe in it in an overall scale, but I don't believe in it in terms of an intraday scale. And if you guys don't know what I'm referring to, I'm referring to this price cycle, right? I only care for it in terms of an overall scale. I don't really care for it much on an intraday, minor intraday scale, which would be here. So yeah, I mean, very interesting. I am very interested to see how we close today's daily, right? Because this could still be bearish. EU could still be bearish, right? It still looks like it's going to be bearish, especially after that reaction. But then there's AU, which is still bearish as well. But this one, in my opinion, was probably the cleanest one out of the two. And let's actually show you why. Right, so from a overall scale, right, this is a potential liquidity grab, right, to the upside. So I'm focusing on this bullish structural range, and we were talking about this reaction from last week, right? So that is the bias in play. Excuse me. But, right, this is where last week actually helped me with today, because the essentially price from last week is what dictated the narrative for me this week. So we see that we have a push up, right, a push down, which although we take a structure point, that just makes this a solidified high. So low, high, retracement. This then takes out preliminary structure, making this solidified low, solidified high, and then this melted from the sky, right? So this makes us play inside of a bearish structural range. So even though a potential leg could be in here, right, there is still the chance of focusing on the immediate structural range. That there. So as I'm looking, right, I saw this yesterday actually. I just didn't play it. I don't like playing Mondays, but I did see the turbulence point. The turbulence point intact, right? Where this reacted from was, I think, H1. No, not H1. M30, right? M30 inefficiency to the T. And the play was there, right? I won't lie to you. The play was there. Right, turbulence point, 30-minute inefficiency. If we're looking at the push up, right, low, high, low, high, POI, volume, right, preliminary structure breaks, even though you see that here as well, right, you have the confluence of the volume, the POI, momentum, right, so it makes all the sense in the world to want to take that position. Now the issue was, I believe, no, not there. Yeah, you see that final push up on the M2 candle. And as you can see, there was a potential entry for the downside, right? Conservative, momentum, volume, POI, immediate structural range. You see the confluence that I'm building to build the case, right? What is happening in terms of price? We have a bearish structural range. How is it happening? With momentum, right? With overall potential bearishness to the downside because of the fact that we did not take this high out and we took this low out instead. So that dictated the narrative to the downside. We now have the mitigation in place. So even though I didn't play that, it is still significant to me because this shows a continuation of bearish momentum. So we now have high, low, take out preliminary level structure. This is a solidified low, high, low, retracement, continuation, right? And even though this came up pretty deep, it did not give you that essential break of structure. So this is still considered a lower high. And because we took out preliminary levels of structure, eventually the low, this makes that a solidified high, right? So we have a solidified high, right? And this is one of those scenarios where I try to think to myself, and I'm thinking this is a very deep retracement. This would naturally incline me to want to be bullish, which means I would have probably bought here, right? And as you can see, the reaction was there, but it failed. So that shows to me an intent to want to go lower, even though this is giving me bullish signs, right? So in a natural case, I would probably buy here, right? And that's 100% okay. But at the end of the day, you do got to acknowledge the fact that we didn't break structure, and we did break preliminary levels of structure. So this could be considered a very, I would say, weak type of order flow, because this is now where the order flow continues, right? So we are seeing, I believe I was in M2. Yeah. So I'm seeing momentum, I'm seeing a turbulence point, right? And now I'm continuing structure, right, to the downside, right? So this would be a continuation trade for me, with my target eventually being the counter trend inefficiency, right? Because by all means, this could just be an inefficiency fill to the upside. So this is my target one, right? I don't like playing the 50% inefficiency in the middle of nowhere. But right, I'm acknowledging that while price is currently here. So I have to build a case for whether or not I'm going to try to long early or I'm going to short into a potential POI. But right, luckily for me, right, we then see high, solidified high, low, solidified low, retracement, unwillingness, right, to then give you a bearish structural range, right? So then we see very deep retracement. This is one of those awkward scenarios that I didn't know whether or not I wanted to take this or if I wanted to take the 50%. So I actually waited for the reaction once more, and luckily for me, right, right, we have a bearish reaction based on the 50%. Right, 50% creates a scalp break of structure. Right, and I actually took my position. Right, I didn't like how there were so many candles there, so I actually took my position off of the inefficiency fill here. Let's see. So my position, I believe, was 2 pips. Yeah, right there. 1.7 with my target being the 25 pips, and I am actually maxed out at 12, but it looks like this is going to continue. I was a bit worried due to the fact that we have that continuation BOS in play, but that's exactly why I stress the continuation BOS as a pullback initiation, right? So even though I was a bit worried, I just said, you know what, I'm gonna let it be. The confirmation is in place, the order flow is in place, right? And based on the reaction, based on the POI, my directional bias is correct. Let me see. Right, the order flow is in play. So that's the current position right now. Actually, let's see. Yeah, that's still up right now. 75 pips. That's about 20 pips up right now. About a 1 to 12. Not bad. Not too bad for start of the week. And by all means, if we don't see anything here and we break this low, this is gonna melt. This is just gonna die for me. And this is going to be a very good trade, just because, right, the bullish narrative was there. The bullish narrative was there. But in my opinion, because this high did not take out the previous high and it gave us the correction before and then it came up, it gave price the opportunity to give us the liquidity grab, the change of narrative, right? So even though Monday gave us a very good setup, right, today was much more conservative because the bias, the narrative was already dictated based on Monday, based on Friday, right? So do you guys have any questions? A lot of downside momentum. What are you talking about? Oh, you meant GU? Let's see. Yeah, this is one where I don't really, you know, it's kind of one of those scenarios again. Remember EU when it did this? Do you guys remember this a couple of months ago? Right, where we were pretty much here. And it was one of those scenarios where I know I can play intraday plays, but I'm looking for the overall direction. That's what I'm looking for, right? Just so I'm not glued to these charts. I'm not glued to wanting to trade more, right? But the intraday plays are going to show themselves just like they are here, right? But the matter, or the fact of the matter is, are you going to be able to catch the overall trade, right? The overall direction. That's pretty much what I care for in terms of an overall scale. All right, so the intraday plays are there. Right, best case we get one final push down, but I'm still bullish on this in terms of an overall scale. Would you play EU session today if it happened during your trading hours? What happened during London session today? It just, well, first of all, what kind of trade are you looking for? No, I would not have played that. No way. If you're talking about the, oh, actually, are you talking about the initial move in London or the after move in London? Because in terms of continuation, the only thing that makes sense is structural continuation, and if you were to find something lower time frame there, H4 50%. Oh, perfect, H4 50%. But was there a reaction there? That's what matters, is the reaction. Okay, liquidity, deep retracement. This would have been picking a high. I wouldn't have wanted this. Now, no, probably not. I would have probably waited for that. Yeah, I probably wouldn't have caught that, to be honest. Yeah, it's really just dependent on how conservative you're wanting to be. Because, for example, although this is an M2, I'm pretty sure this is an inefficiency here on M5. Where is it? Yeah, but I would have really wanted the candle. Or there's a 50% inefficiency here too. But now the issue with taking this, if you're wanting to take this, your SL has to be, if you're wanting to take, your SL has to be here, at least. Right, so it's just really dependent on how conservative you're willing to be, right? How are you wanting to make sure that you get in the trade? Are you wanting to make sure that you get the best possible entry? What are you looking for? That's pretty much what I'm getting at here. Is what are you looking for? What type of trade are you looking for? Right? What is happening? How is it happening? Why is it happening? Does the current bias presented give you the confidence to support that? I mean, that was a very nice trade, actually. Yeah. I don't worry about equal highs, equal lows, bro. I don't worry about that. Right? Is Alfie on the call? Yeah, Alfie's on the call. What trade was that where you disregarded the equal lows? I believe it was AU. Where exactly? So I could show him why I don't really care for equal lows. Let me find it real quick. Yeah, let me look at it on my phone. Let me see. Price point was okay. I'll just take a screenshot, post it in the. Actually, no, never mind. We'll just go here. 77.37. Is it here? No, it wasn't here. You're right. You're right. It was over here. I believe it was right here. Either way, that's not the point. The point isn't finding where. Let me just show you the picture. Let me see. Here. So, right, this is something that I pointed out when I reviewed your journal. Let me see, where is this at? Right, equal lows, but a structural range was formed. I don't really care for liquidity. I think that's such a primitive way of looking at smart money concepts, is that just because you see this, you will not acknowledge that because of this. That's such a primitive way, and you have to understand that equal lows, equal highs is liquidity, not a bias influencer. Right, and that's what matters. If you don't understand that, then keep missing your trades, you know? It's just, I think it's a given. But yeah, no, that's just I think that's just a smart money concepts thing. Over time, people have just been like, it's kind of one of those things like, right, I see a lot of people use this trendline liquidity. That doesn't make any sense to me at all. I don't understand how that makes any sense. And it's, I'm not saying it doesn't work. It won't be functional. I'm just saying I don't look right at the chart from a diagonal perspective unless I'm referring to momentum, right? Everything else is on a vertical perspective, right? POIs, structure, POIs, right? Direction, bias, executions, all vertical unless I'm referring to momentum. But even momentum isn't a diagonal dimension. Momentum is time here, it's horizontal, right? So I don't know if anybody in here remembers when I used to talk about that a long time ago. No, we don't have any of the older members in here today. It's pretty much, right, instead of seeing the chart like this, see the chart like that, right? And that was pretty much back, this was back in the day. This was back when we were pretty much discarding trend lines as a whole. This was like September of 2 years ago, long time ago. But I'll show you an example. Right, we used to see everything in the perspective of this. We used to see everything in the perspective of this. Right, until we realized, right, there was no real trend line that was correct. You see what I mean? Which one's correct? And why should this bounce off of your trend line? Right, that's the key. Why? Right, and that's pretty much, that brings me to a video I'm gonna make, and it's pretty much determining a bias via what, how, why. What is happening? How is it happening? Why is it happening? If you don't understand those three questions, then it doesn't really make much sense to take an execution, in my opinion. Adding rationality. But yeah, this is pretty much the example we were talking about. Equal lows. Right, so now you see, you can't explain why this didn't take liquidity before doing that. That's just, I think that's a primitive way of looking at smart money concepts. And that's why I think structure is everything. It's over anything. Yep, so this execution, right? What is happening? That's happening, right? How is it happening, right? Bullish momentum, bearish slow momentum, bullish order flow. Now why, and I'm pretty sure the why would be, you know, where you derive this entire idea from, right? But it's very subjective. Yeah, but hopefully you guys get what I mean with what I'm getting at with that. Right, diagonally, looking at the chart diagonally has very little success. Right, and I guess this is an example of liquidity, or trendline liquidity, trendline trap, whatever. You know, it doesn't make much sense to me, because when you zoom out, let me see. Right, I'm pretty sure this was an H12, was it? I don't remember exactly where this mitigated from. Right here. Right, so this upside move is not happening because of liquidity, your trendline liquidity. That doesn't make sense. That just, I cannot rationalize that. I can't make that make sense for me. No, I don't even play like that. You guys know I don't say take out retail to then get the real move. I think that's nonsense. I don't believe in that. What we trade is a rational a rational approach using specific concepts, which is why you don't see me shitting on other concepts, because it's the same principles. If you use structure the way that we use it with Elliott wave, with indicators, with many other things, you're probably, I promise you, if you dedicate enough time, you'll probably see some type of success. It may not be better than what you're doing now, but there will be some type of progression. Yeah, but I mean, I've clearly stated equal lows, equal highs do not determine a bias. Structure determines a bias, right? POIs, concepts, that's just for you to find an opportunity to play based on the bias, right? So you see, make it make sense. You see? Here we go. Mr. EG King has just joined the chat. EG King. Yeah, you see, also that's also the inconsistency with brokers. In some brokers you may see an equal low, in some brokers you may see a liquidity grab. So you see what I mean? Like I'd rather just not use it as a way to understand a bias, right? The only thing I'll use liquidity for is to find the target. But yeah, do you guys have any questions? Let's see, we've been going for 40 minutes. Yeah, you'd have to check every single broker, but there's too many brokers. Yeah, but the thing is a liquidity grab is not the same as liquidity. You understand that? Just like disruption is not the same as order flow. A liquidity grab is a model based on liquidity. Order flow disruption is a model based on order flow. So you're talking about two completely different things. You see what I mean? Right, so liquidity cannot essentially judge or mislead your bias, because that's not what the concept is used for. Liquidity is used to find a target. A liquidity grab portrays a bias because it is a model based on liquidity. Right? So, you see what I mean? Everything is connected. I'd rather not talk about that, bro. I'm good. I'd rather not talk about that. What do you mean? Plus the liquidity. Yeah, I mean, can you have a liquidity grab without a break of structure? See, then you see? So you see what I mean? What do you mean to the other side? If it's to the other side, then it's not a liquidity grab to begin with. That would just be a break of structure. Yep. The vehicle is on trap. Liquidity? What do you think? You'd have to show me a scenario. Show me a scenario. It's hard to go off what if. I can't. I hate going off what if. Like it's also hard to believe that there's retail traps. It's hard to believe. Like, what research is that based on? Like, do you have legitimate liquidity feed info showing you that this certain thing is taking out X amount of people? That's something that also is kind of hard for me. It's why I don't talk about that. I don't talk about taking retail out. I don't talk about trendline liquidity. I talk about things that make rational sense to me. And the reason, you say the reasoning, there's multiple reasonings. Because at the end of the day, we don't know how the markets move. All we're doing is playing with concepts that genuinely work. And they work based on experience. That is our research. Yeah, but are we, like, being genuine, right? Is the RCV platform a smart money concept platform? Being 100% honest, think about every single thing that I talk about, every single thing that you've traded in here, every single thing that you've seen. Is this the same as smart money concepts? Like, I want you to think about that before you say it. Nah, so how can you base what we're doing off of that? You see what I mean? So it becomes conflicting. And also, bro, like, I can't go off of what if, because what you're thinking may not be what I'm thinking. Let me reread your question. 1 second. Let me reread it. Like, you do understand that what we primarily trade is structure and find a POI based on volume liquidity concepts, right? This isn't a smart money concepts course. Smart money concepts doesn't revolve around structure, it doesn't revolve around order flow, it doesn't revolve around Wyckoff, it doesn't revolve around volume. You see what I mean? And like I said, Lewis, if you want to show me an example, then okay, we can talk about it. But I don't want to go off what if. You know this. We've been through this plenty of times. But yeah, if you guys don't have any more questions, pretty much get off. I'll get off. Yeah, send some examples and I'll answer them when I can. Yeah, I don't know if it's interesting. I kind of more so want to see what exactly you're saying. I don't give this style a name. I just trade. You don't need a name. You just trade. Trade for yourself. I'm not gonna look at EG today, bro. I'm good. But yeah, guess I'll go ahead and end it here.